Good morning, and thank you for the opportunity to present to the TCN Emerging Gems Conference. Pioneer Credit is a debt purchaser operating within the Australian financial services ecosystem. We're a top 2 provider to the banks in Australia in a very unique position with a fantastic market opportunity that sits in front of us. We have amazingly strong vendor relationships built over the course of the last decade and beyond that is valued by vendors and ensures continuity of supply of debt portfolios which we buy from our vendors at a discount to their face value, and then we work with those consumers over time to get a good outcome for them and for us. We have a growing and sustainable income stream. We have a performing loan portfolio of some $460 million spread across a really diverse customer base that's been performing exceptionally well, particularly over the last 6 months as we've seen cost of living pressures come into play in the Australian economy. Why are we successful? We do the right thing. We're a business that understands the value of our vendors, but we also critically understand the value of the consumers that we work with. We do the right thing. We represent ourselves and them with their best intentions, and we work with them on sustainable outcomes. We also have a best-in-class management team with decades of experience in this critical area of commerce. We know how to price portfolios very, very well, and we're aligned with you, with shareholders, in terms of our equity ownership. Management and board own some 21% of this business, ensuring exceptional alignment with shareholders so that when we invest money, we're investing it alongside you. Our focus in the business is very, very simple. Customer care. The end user, the customers that we work with need our support and they need our assistance. And if we look after them and we look after them very well, we'll be very successful. Our job, our purpose is to end debt stress. And we do that by working with consumers to get great outcomes. We provide them, and we do this through providing them with flexible outcomes. That means some of our consumers need time. Some of our consumers need longer than others. Others need the opportunity to settle at a discounted amount and so forth. We work with them, providing them flexible outcomes that are good for them, particularly through these challenging environmental times. And we give back to the communities in which we operate. Pioneer is a business founded in good. Our people are founded in good. And that means that this is not just a business about making money, but we actually invest back into the communities in which we operate. And that is all around relieving debt stress and providing support to those people that aren't able to achieve that. In terms of our performance over the first quarter, the period ended 30 September, very pleased to announce record liquidations. This is our cash flow, the amount of cash that we received of $30.8 million, up some 27% on the prior corresponding period. We also had record EBITDA and record EBIT. EBITDA was up 45% to $18.6 million. So not only did we grow our revenue, but we did so in a way that was more economical, and that's good for shareholders. We also grew our EBIT a total of 332% over the period. A fantastic result, all of which are records, and set this business up for a return to profitability in FY23 and for a very, very solid end of this first half into the second half of next year. Importantly, there are also more opportunities for us to invest our money. Buying debt portfolios off the banks is critical to our success, and there are more emerging in a market with fewer players. Importantly, we do not buy payday loans. Our business is focused on quality and focused on ensuring that we buy the right customers who we understand and can price appropriately, and who we can work with to get great outcomes that work for them and for us. That makes our business exceptionally sustainable and is why it's successful and will become more successful over the years to come. In terms of our outlook, it's very, very clear what we're trying to do. We set our strategy out to shareholders and we deliver upon that strategy and report back to that strategy as we did last year. For FY23, there are 5 key planks to our business this year. One is to continue to thrive under the increased regulatory scrutiny. This is critical to our success, and the reason why it works for us is because Pioneer has a best-in-class compliance outcomes and gets industry-leading results. In an environment where financial services are under regulatory pressure, these are critical to the support of the banks, something Pioneer is very good at and very proud of. We want to capitalise on the opportunities. We've guided the market to an investment of $61 million this year. We've got about 2/3 of that already under contract, but there is opportunity to grow even more beyond that. And we will do that in time on the basis we can find the right opportunities at the right price point that's good for shareholders and one that allows us to appropriately service the consumers. Our growing performing arrangement portfolio, some 460 million, is critical to our success. These are customers that pay us weekly, fortnightly or monthly, not dissimilar to a performing loan book at a bank. It's supported by about $1.5 billion in inventory, consumers that owe us those receivables that we're working with over time. We're very focused on growing that number beyond here. Operating leverage in this business, we've reached scale, so that means there's lots of opportunity to remove cost in a very efficient manner and one that continues to support consumers. We're working on that through this period. We've started to realise some of those costs already. And of course, we've got improving macroeconomic conditions. There are cost of living pressures in this business, and that's good for supply of PDPs. We need those PDPs to continue to grow, but importantly, it's not about the pressure there, it's about how we support the consumers that we're working with. And we're very, very good at that. We think that that's good for our business. This environment's good for our business. There are tailwinds that look like they're going to exist for some time, and that should see us through to profitability in FY23 and growing beyond. I'd like to thank you for your time and the opportunity to present Pioneer Credit to you today.